Ed, there were some high expectations on both the data center, the gaming, maybe even the cryptocurrency business. Perhaps are you thinking that this wasn't good enough?
Yeah, it seems to be, what we expected, but slightly stronger top and bottom line beat from Nvidia. The outlook for the coming quarter, the third quarter, stronger than expected, seeing third quarter revenue of 6.8 billion, plus or minus 2%. The Wall Street was looking for 6.5 billion. There's no update in this earnings statement about the deal with Arm. Of course, Nvidia now has a $50 billion offer on the table to buy Arm from SoftBank, and also no explicit mention when it comes to crypto mining. It's been such a juggling act for Nvidia. Crypto mining and sales of graphics chips for crypto mining really boosted the top line last quarter. I'm sure that there will be some discussion around it this quarter. But what happens if that demand drops off a cliff because of regulatory crackdowns? Nvidia don't want to be caught in a supply gut situation, which applies for all of their customer bases. But it seems, looking at this statement, that data center and gaming continues to be strong, and the outlook seems like it will continue to be strong as well.
There was talk the last couple of quarters about the idea that the company would try to diversify a little bit, to try to get a little bit away from gaming, or at least to sort of provide a little bit of a cushion whenever that slowdown does arrive. Are we seeing any evidence here in this earnings release that that's actually underway?
Not yet. I mean, that's the question around the Arm deal, right? That Nvidia argue that by buying Arm, it gives them greater penetration into the chip industry, an ability to diversify their portfolio, their business. Now, the skeptics of that deal would say, hold on, why are you paying so much money for an incremental increase in revenue? Why don't you just become a licensee of Arm, just like your competitors, Intel and Qualcomm do? You don't have to pay $50 billion for that. They are making gains, as you know, in gaming and also in automotive. Automotive is a small portion of revenue, one of the industries that's been hurt by the supply shortage, but one where Nvidia is making gains as well.
Yeah, second quarter revenue in automotive, 152 million, up 37%. But actually, quarter on quarter, is down a percentage point, Ed. Where is the future that we're going to be guided for here? Where are we going to get any steer on peak chip cycle at all, do you think?
Yeah, what was interesting is that we see top-line growth this quarter of around 64%. That's nothing to sniff at for any company in any industry. Last quarter, it was 84%. And what was so interesting is that Nvidia were talking about being constrained in the first quarter because of the supply shortage. I think there's little commentary in the earnings statement that I can see right now. So we look to the call to find out when things will improve. One concern that Wall Street has, particularly on the stock's performance, which has been strong this year, right? Really outperformed the SOX and the S&P 500. One risk to the stock is that customers could be over-ordering to overcompensate for the supply shortage. And there are all of these signs that we're looking for Nvidia that they could potentially be left with a supply glut. So it's about how they manage that in all industries that we're looking for.